Alright, what's going on, guys? It's Luke here. Today I wanted to make a video going over higher probability fair value gap or inverse fair value gap entries. A lot of people enter off very low probability setups, and I'm going to explain to you guys the difference between a low probability iFVG entry and a high probability iFVG entry. This example right here was a great example. This trade right here from Friday, March 13th. I took this trade. I didn't take it all the way up to here. I took it right to here. But this was a great trade. I'm going to break down this whole trade one more time for you guys because this is a great example of like not an A plus, but a really, really good trade. So what you're looking for in a high probability for value gap, you guys can copy this. I would. You want to see something that has a quick V-shaped recovery, speed and displacement in your favor, 1 to 2 candle inverse, delivering off a higher time frame PD array and a liquidity sweep. Those make it like really good. SMT as well. This had everything. I don't really want to get into specifics on like the higher time frame PD arrays, liquidity sweep. I want to more so just look at the process of the inverse itself and talk about what separates a really good iFVG from a lower probability iFVG. Okay, so what happens here? I'm going to break this trade down for you guys really quick. Depending on when I release this, people might not remember it. So I'm going to go through it really quick. Let me just put the replay tool on. I have a full trade recap. If you go to my March 13th, or no, when was, yeah, it was the 13th, right? 13th. Yeah, 13th. So in this case, price comes down off market open. We start manipulating up. We put in this wick right here, and then we manipulate down. And what do we manipulate down into? A higher time frame PD array. In this case, it is a 1 hour bullish fair value gap. So what am I looking at in this 1 hour gap? If price wants to trade through this gap, we have a draw lower at this unfilled 1 hour below. But if price wants to react off this 1 hour gap, what can I look for? I can look for longs. Okay. What else do we have in this 1 hour gap? Well, we also have midnight open resting right in this 1 hour gap. So as you guys know, midnight open is a really good place where you see price bounce off of. So if price really wants to respect this gap at midnight open, it's probably going to go higher. But if it wants to break lower, I'm still willing to trade at this point down to this gap over here. So what happens here? Again, we manipulate up first, then we manipulate down. We actually end up putting in a bullish SMT. So if you actually look at ES doesn't sweep this. NQ sweeps it all. Let me just put this replay tool back again. So NQ sweeps all this. ES doesn't sweep it. Boom, SMT. Okay, now let's start breaking this down. So we're delivering off a higher time frame PD array. In this case, it's a 1 hour gap. We're also respecting midnight open. We got a liquidity sweep. We swept out all these kind of like internal lows right here. We got an SMT as well. So now more so what I'm looking at in this video and what I'm talking about is the V shape, the speed displacement, and the 1 to 2 candle inverse. We get a V shape recovery. So if you guys don't know what a V-shaped recovery is, this is a V-shaped recovery. Price comes down and V right back to the upside, okay? You don't want to see price go like this, okay? Like, for example, I don't know. I'll find an example, but where it's kind of like where you see if price swept here and it just started being kind of slow and chop. That's not V-shaped. V-shapes where it comes down, sweeps, and just knifes back to the upside. So we have a V-shape. That's check number 1. Speed and displacement. So when you're watching this candle in real time, if you've seen this candle was just going like crazy. The volume in the market was heavy. It was 9:37. Market just opened 7 minutes ago. Volume is heavy. Price is displacing, like we're getting a strong close. The speed on this candle is perfect. So I know there's a high probability that we can at least run to this high right here because this candle's printing quick. The volume's quick. It's a high volume period. And we just get this nice displacement candle, strong close, and we inverse this gap. Now, what am I talking about with 1 to 2 candle inverse? When you have a fair value gap, the less candles it takes to inverse that gap, the better. So this is because, think about it. If price came up into this 1 minute gap right here, and it started to go like this, oh, we wick in, we just keep rejecting, and then it finally inverses. That's just low probability. The more candles it takes to inverse a gap, typically the lower probability the trade is going to be. So you want to look for inverse fair value gaps where it takes like 1, 2, 3 candles, depending on the time frame. That's always going to be like different. But in this case, inverse it, 1 candle. So this is showing me, again, we're delivering off a higher time frame gap and midnight open. We got an SMT, liquidity sweep, 1 to 2 candle inverse. We got a V-shaped recovery, and we're getting displacement and speed in our favor. I know we're going to at least run to here. So I just go, because this was a Friday, I just took the internal high, but you could have held to this 1 hour gap. We had draws above. But the main key here, right? The main thing you're looking for, V shape, speed displacement, and a like 1 to 2, 3 candle inverse. We come down, we V shape, we immediately push to the upside. Strong candle that prints fast, it displaces, it's a strong body close with not a big top wick. It's clearly showing that the bulls are in control, and this candle is bullish, and we likely want to continue pushing up. And again, it only takes 1 candle to inverse, so that's high probability. These type of entries where you see price displace aggressively above the inverse, it doesn't leave a big ass wick on the upside here. It inverses in 1 to 2 candles. This is showing that volume is like in your favor, and this is high probability. Now I'm going to show you guys some examples of some low probability iFVG's. So I'll pause this video and I'll come right back. So here's a quick example on a like low probability setup right here. So you can see we have this bearish gap. Let's just say we swept out a bunch of lower time frame lows. We're delivering whatever. Like we want to see price go higher. Okay. So in order for us to go higher, we want to see price inverse this bearish for value gap. So what does it take here? This 1 minute gap. 1 candle, 2 candles, 3, 4, 5, 6, 7, 8 minutes just to inverse this gap. So if you enter this trade right here and you ran your stop here, you're probably getting stopped out if your break even was here. Maybe this played out. Maybe you had a bigger stop loss and this ended up playing out. But these are not the type of trades that you want to be in. You want price in this case to go like this, inverse maybe 2 candles, and then take that long, break even, and hold. Okay, that's the type of trades that you want to see play out. You don't want to see where it takes 1, 2, 3, 4, 5, 6, 7, 8 minutes. Okay, there's no V shape in this case. Even though we get the inverse, people will say, oh, it's an inverse long right here. Put your stop below the inverse. Okay, maybe you get away with a break even on this one because it edges the high. You just go break even and then boom. But it's like no, this is a low probability trade. So you want to look for price to V-shape, displace with speed and aggressive volume, and in line with the higher time frame PD array and all that stuff as well. But the more candles it's going to take to inverse the gap, the lower the probability the trade is going to be. And here's one more example for you guys really quick. I don't need to go through more because it's very straightforward. You can see right here we formed this 3 minute gap. So if we continue to hold it, we're looking for higher, but people will see this and they're like, oh, we inverse right here. Let me short, stops here. We're running these relative equal lows right here. What does price do? It comes in. First it holds it. Boom, starts reacting. Then it inverses. They're like, oh, we displaced down. And you get stopped out. Look at how long it took to inverse this. This is the 3 minute. 3 minutes, 6 minutes, 9, 12, 15, 18, 21, like 20 minutes. So why would you want to take this entry now? At this point, you might as well just wait for price to kind of reassess and look for a continuation lower if you're truly bearish, and wait for it to kind of displace, give you a continuation down there, rather than try to force something. And obviously, you would have gotten stopped out. Maybe you got lucky and had your stop higher. But again, these are just low probability. You want to see price up, knife through 1 to 2 candles, 3 candles, and then look for the short. So that's it, guys. Again, just keep that checklist I wrote at the beginning of the video. I think it's really important stuff to kind of watch. But anyway, that's it for me, guys. The less candles, the better. The better the V shape, the better higher probability when volume's in your favor and displacement's in your favor. So quick video, just want to knock this out because a lot of people struggle with this, but it's super simple. Like I don't really have to show a ton of examples. But that's it for me, guys. I'll talk to you guys in the next one. Peace.